Welcome back to the second hour of Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really pleased to have with me my partner, Chen Lin, who publishes What is Chen Buying, What is Chen Selling? Chen Lin is he's the author of an email-delivered stock trading and investing service for which my company, Taylor Hard Money Advisors, provides the back-office service for. And Chen has had a spectacular track record. We've talked about him before on this show, done exceptionally well in picking stocks. You can subscribe to Chen's letter, to his letter, What is Chen Buying, What is Chen Selling, but only at the beginning of each calendar quarter. And you do need to put your name on a waiting list at miningstocks.com. And Chen will accept a set number of new subscribers at the start of each quarter. However, I must add that if you have been a subscriber in the past and if you have canceled your subscription prior to the expiration date, I would suggest you don't bother putting your name on a waiting list, because people who cancel their subscriptions in the middle of their subscription are not eligible for subscribing once again to Chen's letter. But that said, if you are interested in Chen's work, and I think you should be, go to miningstocks.com and put your name on the waiting list there. Well, thank you, Chen, for joining me again. We haven't talked in a long time. Good to have you back with me.
Thank you, Jay.
Really good to have you. I know you've had a nice vacation this summer with your family at a time when the market, well, I guess I want to get to your views on the market. We've had quite a run-up already. The stock market, really since the lows of 2009. Are you remaining really bullish, cautious, or are you bearish on the market at this time? What's your stance?
Yeah, that's a good question. I get very concerned in the summer, as I mentioned to my subscriber that a couple months ago. I'm very concerned about September.
Mm-hmm.
I was cautious. I got rid of leverage. I raised cash. Actually, a few weeks ago, just before the market started, the commodity market started going down. So I was pretty fortunate. So right now, my position is extremely cautious.
Mm-hmm. All right, so you're not bearish, you're not bullish, you're sort of looking to see which way it's going to turn. What do you think? Do you think you're sort of waiting for the to see which way the Fed is really going? Are they going to really stop goosing the market with new money? Are they going to really taper? What's your thoughts on that?
Oh, I believe the chances high that the Fed stop QE, but by the end of the year, sometime next year, early next year. But we'll find out very soon. And also, there's a lot of events going on around the world. The Scottish independent vote this week, and Ukraine situation, Middle East, IS. The terrorist group.
Yes.
All these things make it very fuzzy for me to predict.
Mm-hmm.
I'm not a fortune teller, so
yeah.
I cannot see that. So that's why I remain very cautious.
Yeah. So you think any of these geopolitical events could really come in and could be a threat to the market?
In particular, in commodity.
Yeah.
Okay, because commodities some related to dollar. Okay, right now, U.S. dollar is very strong. That's my concern a few months ago. I was on the mining trip. I was talking to everyone. I was really concerned about U.S. dollar in September, which unfortunately is becoming true. So all these events can trigger stronger dollar, right? Scottish independence, Ukraine, escalation,
mm-hmm.
Middle East, all these. If dollar remains strong, the pressure will be on commodities, all the commodities. That's my concern.
Right. As people around the world put their savings into what is perceived to be a safe haven, that is the dollar and the U.S. Treasuries, even though treasuries are providing such meager returns as it is, it just seems incredible to me, Chen, that we're looking at zero interest rates in any time near the near-term rates, and longer-term rates are ridiculously low as well. Do you see? So what happens if we actually taper? If we stop the tapering, if we stop quantitative easing, you think we could see maybe rates still fall as depending on these geopolitical issues if money flows back into the U.S.
All right. The thing is, the investors perceive risk, and another thing is that these huge amount of money printed around the world, not just the United States, but China actually print more money than the United States. Okay?
Yes.
There's all the other rest of the country. There are all these, at least paper wealth got created. And then where do they park the money? Right? That's a question for those investors. And with all this uncertainty around the world, a lot of investors chose or maybe choosing to park in the U.S. dollar, right? In the stupid treasury market. That's the way it is. I mean, I think it's absurd, but unfortunately, it's happening.
Yeah. So Chen, you see the dollar getting stronger now. Would UBS just put out a paper, or I don't know paper, but somebody from UBS wrote that they believe that gold, for example, is dependent on the dollar. So their belief is that stronger dollar means lower gold prices. Some people, including David Jensen, who appeared on this show right before you, believes it's the other way around. David thinks that by controlling and putting a price, a ceiling, controlling and keeping the dollar, the gold price from rising dramatically, that is what's empowering the price of or the dollar. The dollar is stronger because gold is being suppressed, is his view. And he points to the large disparity, not so much in the gold markets, but in the platinum and palladium markets, and to a great extent in the silver markets in Shanghai, the physical markets, that there is quite a premium there between the physical markets, what people are actually paying to take delivery of those metals, more the industrial metals, than what is quoted on the paper markets and the futures markets. Do you think any? What are your thoughts on that?
Yeah, those are a good point. I believe, I agree with you that gold and also other silver, other PGM likely manipulated. The premium right now on PGM, I actually invest in PGM this year, and I actually made a very good return on those.
Sure.
Riding on the South Africa strike. So I know, I kind of understand the market a little bit deep. So my take is there's fear of South Africa disruption, fear of Russian. Those two are 80% of PGM market. So
yes.
So that's why the people, actual user who need the PGM for the manufacture of cars and trucks, actually willing to pay. They don't care about what paper is saying. So there's a market. It's called paper market. There's the actual physical market. Same thing. I invest in ethanol. The corn price actually is different, very different. Can be very different than the future price. Future investor can use 100, 1,000 times leverage. They buy and sell corn on the future trading paper, but the actual physical market can be quite different.
Yes, indeed.
So,
yes, indeed. And as David points out, the gold market, however, has is different than the others because there's so much above ground supply, whereas platinum and palladium, as you point out, are used in manufacturing, in cars primarily, and silver also has a lot of industrial uses. So there is a real need to take the physical supply, whereas in gold there's enough gold around the world that it can be probably enough around to satisfy the desire to take physical delivery. So where I think would be the problem for gold is if all of a sudden large numbers of people decided they wanted to exchange their dollars or yuan or whatever else for gold instead of simply rolling over the contracts. Then I think there could be quite a run up in gold. But again, who knows for sure? What are your thoughts?
Yeah, and those. What I think is there are definitely a lot of people, suppressing gold. And that's just like Goldman calling 1,050 at the end of the year. I was shocked, that's the immediate sentiment. So that was a few weeks ago. And then the short just keep coming at gold market. And they are using paper to short it. And most are, Goldman and all the other are really backed by the Fed, by the U.S. taxpayer. So they can short. I told my subscribers they can short as much they want. And then they're backed by the taxpayer. What do you do? I mean, I don't want to, stick my head out.
Yeah.
Right? I mean, just protect myself. They want to short, that's fine. They want to drive the gold price lower, that's fine. I just wait for my spot. I can buy it cheaper. Just look at it that way, right?
Yeah, exactly, Chen. But I just couldn't help but remember recently that when you mentioned Goldman Sachs, that Goldman Sachs actually went out and secured one half of the Ecuadorian gold supply, and I'm thinking to myself, how convenient. I mean, as long as the bullion banks, the boys that are playing in the paper markets, have enough physical gold to let it out, there's something like 100 times more contracts for gold than actually gets settled in physical in the United States. The Shanghai market, I understand, is a lot different than that, at least at this stage. It's really a physical market, or it's taking shape as a physical market. But it's interesting that Goldman Sachs, almost at the same time, came out with their $1,050 target when they had obtained half of the gold supply of Ecuador. Well, in any event, time will tell. And I hear what you're saying, Chen, because you drive the price lower, it gives you a chance to buy gold lower, and yeah, that's the positive side of this story, I think. And of course, some of us are getting older, and sometime, we know this life isn't going to go on forever, so we'd like to see our boat come in, so to say, before too long. But in any event, you've done so well, Chen, because you have an ability to sort of identify sectors that are going to do well. I mean, I think back on one of them. I think back on was the paper pulp story a few years back, when you were able to perceive sooner than almost anyone else that the earthquake in Chile wasn't going to disrupt the copper markets. It was really going to be bullish for the paper markets, and that's just one example of many. But you also have come up with a lot of other ideas since then as well. Do you see anything right now, any sector right now, that is enticing you, that you find to be attractive?
Well, as I told my subscriber, I already completed out of the ethanol trade, which make a tremendous return in the past 9 months. The Pacific ethanol went from under $4 to over $20, and
yeah,
co-op and all these. That was just home run for me this year.
Yes, it
I'm
was.
already out of that because I want to raise cash, I want to be conservative.
Mm-hmm.
And I'm still in biotech. Okay, I have some sizable holding in biotech. Biotech relatively independent of the market, but still depend on market, but relatively independent because really is their drug out approved or not, right? What kind of future is the drug? So I feel comfortable holding some of biotech, and also I have energy. I feel oil price right now, even they came down a lot, they still have a floor, has a downside, because all these fracking require a very high oil price. A lot of marginal producer will stop producing oil if oil price drops further, which provide a floor. So I also pretty heavy in energy. Mining, as I told my subscriber, already light up because I kind of see, Goldman will drive the gold price lower, which they did, and I hope to catch bottom a bit later.
So you've lightened up on gold right now, gold mining companies, and I think as I look at some of the technical analysts that I follow, that's probably not a bad idea. As a matter of fact, I've raised some cash in my own portfolio that I watch very carefully right now, in anticipation that I'll be able to get back in and buy some gold shares cheaper down the road. But let me get back to this question of ethanol. What was it, Chen, that got you excited about ethanol? What were the fundamentals there that caused you to go out and buy ethanol?
Oh, that was a combination of different reasons. One was the corn price. Corn had a huge harvest last year. So
okay, so the price of corn went down a lot.
Down a lot, yeah, from $5-6 down to $4 and below. So for those producers, a lot of marginal producers were losing money and suddenly become very profitable. The commodity, the margin is very, very important. So it is a huge turnaround. Also, there's a drought in Brazil. There's many, many different factors getting involved. So it's a turnaround of the situation. Like Pacific Ethanol, last year when I invested, it has $100 million in debt. Okay, and then the company is, bankrupt before, and then there are people talking they could be bankrupt again.
Uh-huh.
But now they have 50 million cash, and that is to drop to half of that 100. Basically the cash over that right now. Think of just 9 months how dramatic they changed. So it's commodity business, and it's huge leverage. And they restarted their fourth plant. They increased their percentage of their holding now to 96%, and it's just tremendous turnaround. It's just one. You got those kind of turnaround story. Maybe once. In a few years, if not in a lifetime. That's tremendous turnaround story.
Yeah, the turnaround was there, Chen. But to your credit, when Pacific Ethanol, some people were saying it's going to go down, you started looking at the fundamentals for the ethanol industry, and you said, I think this is a good bet. And because there were a lot of people that thought it would go out of business or thought there was a good high probability it would, you were able to buy it very inexpensively, I guess, and then you did very, very well with that. But folks, that's just an example of how Chen, how he thinks, and he's able to go out there against the markets and a lot of times and pick up things at very good prices. And this is what you get when you subscribe to What is Chen Buying, What is Chen Selling. Chen passes on the stocks that he is buying. He tells you what he likes and what he doesn't like, and then you're free to follow. You have to do your own due diligence. Chen isn't going to give it to you in a silver spoon, but he's providing that information to you in a way that you can utilize it, and a lot of subscribers have done very well with Chen. So I guess the biotech issue, though, Chen, is really more of a company-by-company situation, but what you're saying is that it is not correlated very strongly with the general market. So you could have a general market go down, but if you're on the verge of developing a breakthrough drug, then you can do very well even in a bad market. So I guess you're holding some biotech in your portfolio. Is that right?
No, that's correct.
Okay, let's go energy now. Let me just ask you first of all, before we get to energy, what biotech, a name or two that you really like?
I like Sarepta Pharmaceutic, SRPD. That's, for example, Acelerex, ACRX. They all has FDA decision in the first half of next year, if not a little bit later, summer of next year. So they have sufficient capital to get to FDA decision, which is good. They don't need to raise any more money anymore. So
that's good.
You can just wait for the FDA decision.
Okay, so if you buy those stocks, you're betting on the possible positive decision from the FDA, and with that, I guess you would expect a pretty significant rise in the share price.
Yeah, I believe, and I hope so. Yeah.
And you hope so. And if of course it comes out the other way, then you could be in for some disappointment and a downside risk.
Yeah. You will take a hit, but I have to calculate the upside and downside, and what's the risk I'm taking. And right now I feel comfortably holding both stocks.
And but of course, biotech wouldn't be, you're raising a lot of cash, and you're out of a lot of different things now. So biotech wouldn't be a giant part of your portfolio, I would guess.
Right, it's a sizable, but not like
it's not 50%.
Right, no, definitely. Okay. But I like to keep some biotech, have some exposed. Yeah.
Sure. Yeah. Otherwise, you miss the train pulls out of the station. You miss the upside, and I've been there and done that way too often, Chen. Sometimes not content to put my full faith in Chen Lin's appraisal. Sometimes I get a little bit worried. But Chen, what I admire about you is your ability to stick with the theme, even if the market doesn't like it. Even if the market doesn't see what you see, you have the courage of your convictions to stick in there and stay with something unless you can be convinced that you were wrong about your thesis. So that's what I think also has made you so effective. Okay, so let's talk a little bit about the energy markets. Yeah, oil is down quite a bit. You mentioned though that you're not worried about oil going down a whole lot more. Am I right in saying that? In part because you say if it goes too much lower, you're going to have the fracking supply that comes from fracking is going to probably will slow down. Is that right?
Yes, there are a lot of marginal oil producers that require, $80, $70 oil. So
Mm-hmm.
so there's a floor of the oil price plus the transportation costs, right? That you're looking at the wellhead. So they're when they're getting lower, there's a lot of production can be slowed down.
Mm-hmm.
So fracking is one of those, and there's all the other, offshore drilling, and then some drilling at the expensive places, right? So they would affect the oil production.
Mm-hmm.
So there are some, but I had because I see the fracking revolution. I invest in fracking company too. I look at it, it's just amazing how how successful some fracking fields are. So actually last year I got scared. So oil may drop, and I didn't drop last year. I was a year early. Now this year started to drop. So
Uh-huh.
you can never time it 100%. But I always have a concern. The oil price may come down, but on the other hand, oil I believe there's a floor of the oil price. So I feel comfortable that if you buy low cost oil producer,
Mm-hmm.
you have their own internal catalyst, they can do well. Just look at the oil stock. I have my core oil position, Pan and the Mar Resource. Pan is very stable. Mar Resource are going up. Well, oil was crashed. In the past few days, oil stock almost every oil stock went down, but Pan went up a little bit. Mars went up like almost 15-20% just in the past few days. So those are the stocks. They have their own internal catalyst, so
Mm-hmm.
they can move independent of the market. I've been holding for them for years, and I believe in them.
Mm-hmm. Yeah, and I guess Mart is actually now starting to grow quite a bit. Its oil production. Is that right?
Yeah, it's oil production in Nigeria. The key is they need to get the new pipeline up. Right? The management was hoping, the end of first half of this year. It didn't. I was hoping for July. It didn't come. August didn't know. September. But last press release they said they're hoping for September. That was very close. So I think maybe they're getting really close, or investors are convinced the new pipeline is going to come. So and with the new pipeline, not only they can triple, quadruple their production, the loss rate by the theft will be much lower. That's very important. So that's a major catalyst for Mark. I've been waiting for that for a long time, too long. But finally, it looks like it's coming. So at least the stock market believes.
Well, maybe you have been waiting for quite a while, but Chen, I might just mention to our listeners that you were in that stock, I think, when it was 10 cents or 15 cents. You were a very aggressive buyer of that and telling your subscribers to do that. And where is it trading recently? $1.30 or something like that?
Yeah, something like that. Yeah, and then they pay me back about 50 cents in dividend already. So I already got all my money back, and I'm still
Chen,
enjoying the ride.
If they triple their production, can they triple their earnings on that production, assuming a same price for oil?
Yeah, they probably they can triple it. And then remember that the theft rate is much lower at the new pipeline. So yeah, they can easily triple that. They should have a significant cash flow every month. My estimate, they can, depending on oil price, depending on all the different factors, they can easily do 20 million cash flow a month, maybe more, probably more. So you can think for a small company, that's very significant. They just every day, it's almost $1 million, right? So just you go to sleep and the company make $1 million. So which is good. I'm just waiting for them. Frankly, it's too long. Nigeria is always slow, so it's kind of frustrated. But hey, it's coming.
Are you concerned, Chen, at all about the political situation in Nigeria? Are you concerned about political risk in Nigeria?
Yes, I am concerned. But on the other hand, this is a company, we discussed that before, many times in a radio show as well, because the Christian Muslim population, they all feel pretty close to shoreline, so I feel comfortable about that. And plus, in addition, this company, they have a very solid balance sheet, very good asset. So that's I think a geopolitical risk that's worth taking. Right?
Yeah, I think so. I think you're obviously right about that. But Pan Orient is one that hasn't really performed very well. It did pay out a nice big dividend when it sold off an asset in the past, and that helped a lot of it. As I recall, a 75-cent dividend. What's taking Pan Orient so long, Chen, to see any significant rise in its price?
Right. The problem for them was, they acquire a lot of very important assets during the financial crisis. Actually, we discussed that the CEO is a go-bug, which I really respect. He's a very prudent man, so he money on the side. So he have a cash. When nobody has money, he has money to buy. So he bought in 2008. He bought back some of his share actually. Then they also acquire a lot of assets, and the asset takes a long time to develop. To do the 3D, 3D, 2D, all the seismic, and then get a permit. All this is slow.
Yeah.
So that's one thing. And then the early phase when he got the permit, he drilled 5 wells in Indonesia. Out of 5 wells, I think it's a few are dry hole and a few one hit, but it wasn't that big. Another one couldn't reach the target because drilling. So all these things is like for investor got frustrated, right? So what are you doing? So some people say, you're going to drill every well from now on will be a dry hole, and then you're going to squander the rest of your money. It doesn't work this way, right? You know that because there's many different concessions, and then people learn from their mistake. I wish, they had some success before. I hope that it didn't. I mean, that's life because you're taking the risk. But one of the concessions, finally, they finish up the seismic, so they can offer for the for partner to bid, right? So they're going to farm out 50% of that to bring a partner to pay them to cover all their costs. That's what I heard last year. So that's in their last year conference call. So I assume it's still valid, and then they will come in to drill, build a road, drill well to test this potentially huge deposit. It's about 500 million barrel oil equivalent.
Wow.
So it's a huge discovery. If it's successful, that's why they can really they want to bring a major partner. We'll see. They should announce last quarter. They said we'll announce in September. So now it's mid-September already. So I assume probably in the next couple of weeks we should hear some announcement. And then after that, you can see how the stock react, and then you can see how investor react, because right now the investor absolutely has no idea about this concession, absolutely have no idea about this huge, potentially world-class deposit, and then very good fiscal term, 35% and 65%, the best in Indonesia. It's too good to be true. The reason for that, such a low-hanging, I talked to the CEO a couple of times. I said, why it wouldn't drill like 20 years ago? Because it was a national park.
Oh.
It was a national park, and then global warming come in, and then the water level rise, and then so the lot of tree die, and then the people illegal farm it. So so they redraw the park, the national park around 2008, and then Ken was the company go there and grab it. But when they first become available during financial crisis, but over there very, very remote. You hear tiger eat people, tiger eat all these all the time. So it's a very remote area. So it's hard to do the seismic. So that takes a few years. But now it's almost there. So this can be one of the most exciting well in the whole oil industry. One of the most exciting. It's supposed to be. I saw the schedule either early next year. They need to build a road first, takes a couple of months, or if they build a big road, it may take 6 months. It will maybe push to the summer next. But that's the plan. Early next year or next summer, they will drill this well. If successful, it worth. Listen to this: $100 to the share price.
You mean
right
that?
Now stock is sitting. Yes, I mean this. Yes, that's right now stock is $2. Nobody really cares. Nobody really knows that. So that's why I'm really excited about that. I'm talking to my subscribers for a long time. I've been waiting. Actually, this one was the one I've been waiting for many, many years because I knew they have this.
I know you have, Chen. You've been patiently waiting, and again, this is an example of the courage of your conviction. You know, I mean, some people, yours truly included, can be swayed by the markets. You believe in something, you place your bet in a stock, and then but then the 1 year goes by and doesn't do anything, and the second year goes by and it doesn't do anything, and pretty soon you start to say, well, wait a minute, maybe I was wrong. Maybe I better just get out of this. And of course, there is the time value of money that hurts a lot to sit with these kinds of stocks. But if you're talking about the kind of payoff that you're talking about, then it's well worth waiting. That's no guarantees, folks. Chen's not saying it's a guaranteed $100 number, but what we're saying is, I guess what you're saying, Chen, is that you believe it's got the potential to be extraordinary.
It by potential, and then it's not pricing the stock right now. Stock right now only pricing the $2 stock. They have $1 cash, about $1, a little bit less, maybe 80, 90 cents, and then they have a Thai producing well worth $1. That's really their valuation. There's no valuation on the Canadian asset, which have a significant news, should have very soon, in the next month or two, and then they will have other drilling, very important drilling in Thailand. And so our market really doesn't price in. Market just think, oh, this company sucks. They drill all the dry holes in Indonesia, which is what's unfortunate. Yeah, but you got to, there's some failures. I mean, that's the thing I cannot control. The management, I'm sure they cannot control either. But very important, the management own a lot of shares of the company, and then they bought it. They bought a lot of shares from the open market.
On the market,
On the market, yeah. So that's why, they believe it. And I believe it too. So so you need to stick with those management. And I told you that they are gold bugs, so which actually mean a lot to me. Hopefully to some subscribers, because they are really prudent people. They try to they're very careful, financially careful people. So that's
I care. Also,
2009.
Also careful about dilution, right, Chen? They're the owners.
No dilution in the past many years, and so that's why there's no coverage.
That's true. That's true. That's true. There's no money for the analysts, so they don't cover the story. Well, that's why we like to hear what you have to say, Chen, because you're not getting paid to say this stuff. You're not being paid by the companies to promote them, that's for sure. You're just simply going out and buying things that you believe can make Chen Lin family some money. Chen, we're almost out of time, but I do have to ask you before we conclude our discussion. We got your at least your near-term bearishness on gold. That's as I take it, that's your stance right now. But you do have some gold shares in your portfolio. Maybe you could just tell our listeners what a couple of your top 2 or 3 gold share picks are at this time.
Yeah, my producer, top one still is Oceana Gold. It's just a fantastic company. You look at all the gold companies, they were cutting, they were down 70, 80, 90%. Oceana still is pretty close to all-time high. I mean, it's a very good company. It's my top holding in gold producer. Exploration companies start to get into that. Actually, if you look, exploration companies are doing quite well. Even the downturn, because investors are getting smarter. They can look beyond that. Right, so I think recently I recommend a few. One of actually is thanks to you, Canamax. Right?
Yeah, Canamax. I'm looking on your scorecard. I think you picked it up in June, and it's up 106% or so as of last weekend.
Thank you. Thanks to you. I mean, you brought it to my attention.
Well,
and I studied that. I talked to them. I also talked to their board member, actually, with the gold resource. They own 19%. I talked to them to ask them why do they invest in. So and I was very impressed with them, what they have, their assets, and thank you for bringing to my attention. And that's been a very good pick for me. So
well, I have some more I want to share with you too, Chen. I just came back from Colorado at a very, very good conference that I just came from, and I think because the sector is so out of favor right now that when the market finally turns, I think there's going to be some big money to be made in the gold sector, and I want to share some more ideas with you. But I think you've probably brought as many good gold ideas to me as I have to you over the years. So, China. I just can't let you go without you giving us your view on China. I mean, your parents live in Beijing and in southern China at a city down there in Shenzhen, I believe. So tell us what your latest? We hear all kinds of things on China. You know, there are bears on China who think the world is coming to an end. There are other guys that still think that China is the savior of the economic world. What are your thoughts?
I'm being quite cautious on China as well. And that's part of the future because China really, really slowed down. I mean, early this year, I told my sister that China's housing bubble really popping. And now you see it. And then I also predicted to my subscriber that the China gold demand will be weak, which it happened. The China, it's interesting. It's just the problem right now, right? The China, right? You see China story, right? 30 years of growth. I mean, first 20 years probably good, growth. And the last 10 years, a lot of them are actually associated with money printing or credit expansion. So there's a lot of problem right now. The credit, there's just too much money printed. They every time that they have stimulate the economy, they want to keep 7%, which I think is crazy. They probably should, accept the fact that China maybe grow at half of that, maybe even less. Right, to get a more solid, more sustainable growth instead of just print money to grow. I mean, that's a serious problem in China right now. So I'm very cautious, very, very cautious. Chinese housing market finally start to pop, which is a good thing, okay? I mean, it shouldn't, otherwise the bubble will blow amazing, It's already a huge bubble, so yeah, we'll see. I mean, I'm always in, wait and see mode, and I want to see what's the next. Will be the policymaker. Their decision in the next few months will be very important to determine where China heading in 2015. So I'll be watching. So.
Well, you'll be watching, and I'll want to know what you have to say, and I'm sure our listeners will too. So sometime towards the end of the year, at least, if not before, Chen would like to get your take on China and a host of other things, topics, and find out if there's a sector you're particularly keen on as we head into 2015. Anything else you'd like to add today, Chen, before we conclude our discussion?
Oh, not much. Thank you for inviting me again. Appreciate the opportunity to chat with you.
Well, we should have you on more often. I mean, it's just, I think it's a disservice to our listeners that we don't have you on more often. So I want to thank you again, Chen, for being with us, and I look forward to doing it again in the not-too-distant future.
All right. Thank you, Jay.